Why did China decide to open up their financial sector this past week? Here's the news story from Zero Hedge talking about it. It's being talked about all over. It coincided with President Trump's trip there. China has decided to cap 51% ownership by foreign investors into their financial sector firms. In my opinion, I think this coincides with some of the announcements that have come out with high-ranking Communist Party officials out of China, and even the head of the People's Bank of China, or PBOC, and other high-ranking PBOC members warning about the unsustainable credit bubble and debt problems in China with their municipalities, with their state-owned enterprises, and their shadow banking system and unpayable loans. And so 90% of the financial system, the banks in China, were owned by the government. And in my opinion, this 51%, that means that China is willing to open up to attract foreign capital. This is maybe secondary motives, might be to steal patents or steal innovation or things like that. But the main purpose of this is they are desperate for the dollars. And so people who are in the gold community who would say, oh, well, Jason, China has over $4 trillion in reserves. China has all this physical gold. Why would they need the dollars? I'm going to point out now that China really doesn't have as much money to do bailouts as many people in the gold community claim. A lot of these gold-backed petrodollar bulls claim. So China at one point had $4 trillion in reserves. In the last 18 months, they've spent around $1 trillion just patching holes, patching leaks in the boat, just to delay things. And so the publicly stated balance sheet on the People's Bank of China's own website, and this could be an understatement, says that the People's Bank of China has 220 trillion with a T, in liabilities. So when you convert that to US dollars, that's around $40 trillion in liabilities. So that's an enormous credit bubble that has happened. And so that $4 trillion that China had in reserves, they can't use all that money for bailouts. Now, they've used some of it, but a good chunk of that money, at least according to experts, around $1 trillion is already committed to their new Silk Road project. So I don't think they're going to shy away from that. And so they've also committed around $1 trillion to hedge funds and other illiquid investments, and doing so with that would hurt a lot of their investments too, pulling out now. So they've invested in mining companies, they've invested in other foreign investments. In fact, they were buying so many European firms that the European Union is now putting up new regulations to try to prevent Chinese firms from buying as many European companies. China just doesn't have all the resources to bail itself out. So then you would bring up gold. Jason, China has, maybe 20,000 tons or more of physical gold. Okay, well, Louis Camerasano of Small Gold, he did an article and a short video about this. The article was from October 19th of this year, and he did a chart, and he said basically if gold went to $13,000, that would still only give China about $8 trillion extra there in their asset column, in addition to maybe only $1 or $2 trillion in cash reserves at this point. So China does have a trade surplus with a lot of different countries, and they do still have money coming in, but they don't have anywhere near the $4 trillion that they originally had in US dollars and US treasuries. So they've already spent some of it, and that money is already committed to either Silk Road projects, or it's committed to sovereign wealth fund and other illiquid investments. So they can't liquidate all that cash immediately and start going to bailouts. And that, in my opinion, is why China has opened up its financial sector, because they're trying to use other people's money for the bailout first. This is the smaller bailout before the really large-scale bailouts have to occur with currency devaluations or other types of tricks that governments often do. And this is because China does Keynesian economics, and this is never before seen Keynesian central planning on an enormously large scale. No other country has added this much debt this quickly. Even the United States, it took a long time to add that much debt. And there's a good article about this. I interviewed Daniel Lacalle a few days ago, but last week. And so he wrote an article about this for Mises Institute a couple weeks ago about China, called Crisis or Stagnation, Why China Cannot Deleverage. So it's not just Jason Burack warning about, how China now could be potentially the next global economic landmine. It's also Louis Camersano Small Gold, who's a very smart guy. It's also Daniel Lacalle, who has 25 years, who has a PhD in economics and 25 years experience working in the financial markets, and he's read Austrian School of Economics too. So he has a very balanced knowledge base. Also, a lot of hedge fund managers, whether it's Kyle Bass and others. So there's a lot of experts. And Daniel Lacalle thinks that the RMB might have to be devalued 16 to 18% in the near future. And that just might be the start. So China's already done some devaluations with the RMB. They've changed the currency, their dollar peg, along with, I think, other of their currency pegs. That's a devaluation when they change the exchange rate of the RMB or yuan against the US dollar and repeg. So that's a devaluation. What do you guys think about this? I think, when you look at the backgrounds of a lot of the high-ranking Communist Chinese Party officials and a lot of the people at the PBOC, they share a lot of common backgrounds with a lot of the same, globalist economic and political elites in the United States and Europe. So, they've done an even more amount of central planning and debt creation at a faster rate than many other countries in history. And I got in an argument with another listener. He was telling me, Jason, the Chinese are going to have enormous amounts of demand for copper going forward. I don't think he understands exactly how much demand for copper China pulled forward into only about a 15-year span since they joined the World Trade Organization. They pulled many decades worth of demand of copper forward, perhaps more than 4 decades worth of copper demand forward into only about 15 years, just an insane amount. And so that amount of annual copper demand that China has done in the past is not a sustainable amount of demand. And so a lot of copper bulls out there will not talk about that. They'll cite, the Goldman Sachs reports that basically don't discount Chinese copper demand falling that much. And so a lot of these copper bulls did not see the copper price crashing from around $4.50 a pound with record high inventories in 2012 and 13 and crashing to almost like $2.20 a pound, I think, at one point. So the copper price got absolutely destroyed at one point. But ironically, a lot of copper miners actually didn't go bankrupt. And so maybe some mines were shut down temporarily, or some marginal production was cut, but there wasn't a huge amount of bankruptcies of copper miners. But yeah, according to Daniel Lacalle, Chinese total debt has surpassed 300% of GDP, and in the first 9 months of the year, money supplies increased by 9.2% above the estimates, and they've added more debt in the first 9 months of this year, 2017, than the US, Japan, and the EU combined. And so, Lewis, with this chart, Lewis estimates Chinese total debt at 28 trillion. I think he's underestimating it. And it's already over 40 trillion US dollars. And that could be an underestimate that the Chinese government has given. And most importantly, their credit issuance hasn't stopped. So just because you hear the head of the PBOC talk about a Minsky moment doesn't mean they've stopped issuing credit. I think, this announcement with this Chinese, to summarize this short video, I think a lot of the problems in China have to do with central planning and misallocation of capital. We're in the trillions, many, many trillions of misallocation of capital now, and that money has not all stayed in China. It's leaked out into real estate markets in Vancouver, in Toronto, in London, in the United States, in Western Australia. Some of that money has gone into cryptocurrency. A lot of mainland Chinese are actually buying physical metal. Physical precious metal still. But in my opinion, this opening up the financial sector is they're trying to use other people's money for a smaller bailout before they have to do these large-scale bailouts or currency devaluations. Or I don't think they're going to do a full debt jubilee, but governments will always try to change the rules. And so I think some good firms in China, but most of them are ones that are not taking government money. There's a lot of rot hidden in the state-owned enterprise balance sheets too. The large publicly traded companies, there's a lot of corruption and rot and waste and fraud there too as well. So what do you guys think about China? It's good that they're adding physical gold. They're diversifying away from their dollar and treasuries, but they've created so much credit in such a short amount of time that even with $13,000 gold, it would not cover their credit bubble. So that's for perspective. That's how crazy China's credit bubble has gotten in the last... Really, their credit bubble has exploded since the 2008 financial crisis when they went into a crazy amount of stimulus. I don't think they had anywhere near this amount of credit problems prior to the 2008 financial crisis. And so, they've gone that way. And, their reserves are not anywhere near enough to cover this credit bubble. And their gold is nowhere near enough to cover this credit bubble. And, I don't think China wants a 100% gold-backed currency anyway, because that would cause a lot of problems for their export business. They're the only country going on a gold standard. As much as I'd like to see a lot of countries go on a gold standard, I don't think a country like China or any other large country that does a lot of exports wants to be the first and only country to go on a gold standard, because then their exporters would start to complain that they're not competitive worldwide. Wall Street for Main Street needs your help. Since the middle of 2016, YouTube continues to increasingly censor and sabotage the growth and success of my channel with dramatically slower or no subscriber growth, a huge decrease in views per month compared to 2016, and well over $10,000 lost in Google AdSense revenues the last 18 months. I should have been way over 20,000 subscribers and way over 3 million views last year, but it feels like I am Sisyphus trying to roll a heavier boulder with more and more additional weight up a steeper and steeper hill. In the last few weeks, all of my videos have been set to demonetization by default, and I have to manually protest each video. This is in addition to even lower than usual Google AdSense revenues after the adpocalypse started over a year ago for me. This has also affected my ability to get paid advertisers to agree to deals not involving YouTube, as I lost $3,000 per month in paid advertising deals at the end of June 2017 because all my analytics are down a lot thanks to YouTube censorship algorithms that have intentionally kneecapped the growth of my channel. With YouTube/Google/Alphabet /Don't Be Evil strongly considering demonetizing or setting all libertarian, conservative, or pro-Trump content to private to prevent any sharing or monetization, it is imperative I have a contingency plan to figure out how to make a living off my content. Each 30 to 40 minute video takes a few hours of my time before it's released to the public. There's a strong possibility that in the near future, YouTube will force me to move all or almost all my content to a new video upload website that allows free speech or behind a paywall on my own website. Thanks if you have already made a one-time or recurring monthly donation, and thanks in advance for any future donations as I decide the future of my channel and what to do with my content going forward. We accept one-time donations on the Wall Street for Main Street website via PayPal, Bitcoin, or Gold Money. You can also become a monthly Patreon contributor for $1 or more a month if you want to help me out. And don't forget to like each video on YouTube and share it with your friends and family if you think they would like the content.